As Bitcoin has recently rebounded over 20% from its local lows, we can now look at on-chain data to get a better understanding of how BTC is likely to react in the coming weeks. Here are all of the charts you need to be watching. Today, we're going to be looking at the key Bitcoin metrics you should be watching over the coming weeks and potentially months, and where better to start than the Bitcoin Fear and Greed Index chart we have here on Bitcoin Magazine Pro. So if we just zoom in over the most recent few days and weeks of price action, we can see that we actually hit extreme fear pretty much. We had scores of 26, 29, all the way down to 25 as Bitcoin was beneath $60,000. But since then, in the last few days, we've obviously had a pretty nice rebound to where Bitcoin now sits above $65,000. And we're in a somewhat greedy but pretty neutral area, especially considering the retracement we've seen from the past few weeks. And another chart that really exemplifies this is the Bitcoin funding rates. And we can just go here. I have this as coin denominated funding rates. You can change this from USD or coin up here. And if I just zoom in, we can again see at the absolute bottom of this local move is when funding rates were very negative. People were actually paying a premium to short Bitcoin, expecting lower prices. And it's a lesson that maybe takes a little while to learn from some investors, but we can see throughout pretty much all of Bitcoin's price history, as soon as we have excessive shorting in the market, it's usually a good time to start accumulating some discounted BTC. We can see numerous examples of once we get this excessive bearishness in the market that actually counter trading, a majority in these instances, typically performs quite well. So what other metrics should we be watching in the coming weeks? We've seen that we've now bounced. We've seen that conditions have become a little bit more favorable, a little bit more bullish. So what do we actually need to look at, again, over the coming weeks and months to maybe give us a better insight into where Bitcoin's price may go? Well, the first one that I'm looking at is the active address sentiment indicator, which is looking at the 28-day percentage change of active addresses or users on the Bitcoin blockchain. And alongside that, the 28-day price change in percentage terms. This is basically giving us a little bit of insight into whether downwards moves are maybe justified because there's been a decrease in network users, or if rapid price increases are again backed by new users actually coming in and using the Bitcoin blockchain. So if we just zoom in here, we can see these upper and lower standard deviation bands. And usually once we cross beneath this lower deviation band and cross back above, indicates that maybe Bitcoin was a little bit too oversold considering the amount of network activity we're seeing. If we zoom out here, we can see multiple instances where Bitcoin's price crosses above this lower deviation band, and usually we do see a little bit of a pop in the Bitcoin price action. On the contrary to that, once we see Bitcoin's price far exceeding this upper deviation band, like we saw at the most recent all-time high we've set, and cross back beneath it, that maybe indicates that a cool-off period is required. So if we go to the Pi cycle top indicator here, this actually gives us a really good level we need to be watching over the coming days and weeks. If we just zoom in here, this orange line, which is the 111 moving day average, we can see that this currently sits at just beneath $65,000. In fact, just pretty much where Bitcoin's price is sitting right now. So Bitcoin is trying to turn this level, which was previously resistance as we broke beneath it and bounced off this before lower. We've now tried to actually break back above this and turn it into support, which is hopefully a bit of a bullish sign. If we can actually find some support on this and rebound, then that's going to be a very good sign for the Bitcoin price action. If we just look at some historical instances in which we've seen similar price action, we can see here in 2019, we had a very similar bounce off of here. And then pretty much all throughout this bull cycle, we've come down, retested this level. And once we've reclaimed it, once we've turned it back into support, we usually see quite a good little upside move following. So hopefully now Bitcoin can reclaim this level. New investors, new retail buyers can come in and see a little bit more strength in the market and potentially start reaccumulating to drive prices significantly higher. And alongside that, another great on-chain metric is the short-term holder realized price, which is actually providing a little bit of confluence alongside that 111-day moving averages. Usually once we see two different metrics giving very similar price levels, very similar indications of bullishness or bearishness, it almost solidifies, it reassures that that is a very strong signal we need to be watching. And the short-term realized holder price is also sitting at around $64,000, nearly $65,000. So aligning very nicely with that 111-day moving average. And again, Bitcoin's trying to reclaim this level. And this is, again, one of the key levels throughout Bitcoin's entire history and one of the most powerful levels for reaccumulating on dips throughout bull cycles and potentially shorting on rebounds during bear cycles, but we're miles away from a bear cycle. So if I just zoom in and give us some examples here, this is looking at the average cost basis of new market participants. So once we actually see new market participants at break even on their investments, if we just zoom in on the 2016, 2017 cycle here, we can see that every time they're at break even, maybe this is a point at which more experienced long-term holders come into the market and say, this is a good area to accumulate. The risk reward at this level is very much favorable. Maybe we see these new short-term holders begin to capitulate. Maybe we see a little bit of doubt and fear in the market. And it's looking like this time is going to be no different. We've temporarily dipped beneath this line. And as we reclaim it, hopefully it gives us some indication that we can move substantially higher. If we just go into a Bitcoin price chart here, one thing we can't ignore as well, as much as we can look at technical on-chain fundamental factors, really there is something we can look to, which is just plain and simple technical analysis. And it doesn't need to be complex. I'm just going to look for big, round psychological numbers. And if I just look to this level of support around here, which is the $70,000 level, we can see multiple instances of Bitcoin being rejected at this level of resistance. It's just beneath where we set our previous all-time high, well, our current all-time high. And we can see just throughout the last 3 or 4 months, we've rebounded beneath this level multiple times. And then to the downside, we actually have, well, again, where we've rebounded from multiple times, pretty much the $60,000 level. So as we sit pretty much smack bang in the middle of $70,000 and $60,000, I think the most key level we need to be watching is the 111-day moving average, as well as the short-term holder realized price. I think if we can have a few days consolidation above these lines and really show some short-term strength, then it won't be too long before we start moving back towards that $70,000 resistance level. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on Bitcoin Magazine Pro, your #1 source for Bitcoin analysis. So just to summarize, following Bitcoin's rebound from beneath $55,000 to above $65,000, we can look to on-chain data rather than just relying on price action speculation to accurately and unbiasedly identify the key metrics we should be watching over the coming weeks. And we identified them as both the 111-day moving average of the pi cycle top and the short-term holder realized price, which have converged and are providing confluence as either support or resistance. We'll have to wait and see over the coming days whether we can hopefully break above that convincingly and consolidate to build a solid foundation for a big move higher. And we should also see this apparent indication of irrational fear that we saw just a couple of weeks ago, both in the fear and greed index, the spent output profit ratio, and the funding rates, that those were very much local lows. These historically counter trade signals have performed exceptionally well. And again, once we see irrational emotion taking over our investment decisions, it's time to step back and maybe look at a more unbiased, logical, technical, strategic approach, such as using charts and on-chain metrics we've seen today. And as we can see, as Bitcoin is currently sitting right beneath that $70,000 resistance and that $60,000 support, we really need to be keeping an eye on these metrics over the next few days and weeks, as it'll give us a great indication of whether they should be more bullish on the near to medium term, or maybe if we can, again, break beneath. It's a win-win, really. We either break beneath, and obviously we'd wish for higher prices. But again, if we start making higher lows, we start setting a solid foundation on that $60,000 spot, it again gives us a great opportunity to potentially accumulate more discounted BTC. If you liked this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And to celebrate the launch of Bitcoin Magazine Pro, we're currently offering a free trial for all new site subscribers, so don't miss out on this limited time opportunity to try all of our advanced features free of charge. Thank you all very much for watching, and I'll see you in the next one.